Hi, Andrei. Um, this is my second interview with Andrei Polgar, and thank you very much, Andrei, for doing a second interview and a
Always a
second sort
pleasure.
of catch up. Thank you very much. Look, I was so impressed with Andrei, everyone, because I did interview him a first time, and he's such an impressive young man. Not even yet 30, has his PhD in economics, basically trades cryptocurrencies. He's an economist that trades cryptocurrencies, which is amazing. A lot of economists don't trade at all. Plus, he's written 2 books. And the book that I'd like to bring to everyone's attention, which I think is an amazing read, is The Age of Anomaly, Spotting Financial Storms in a Sea of Uncertainty, written by Andrei Polgar, Polgar. And it's quite an incredible book. And the reason why I wanted to do another interview with Andrei is to put it on my Twitter feed, my LinkedIn, but also I've got my business is Esoteric Trading Solutions, and I want my clients to also see another in-depth interview with Andrei, because I was just so honestly, Andrei, I was so impressed with you. Seriously, man, you're just one impressive guy. Just first question. Could you tell us a bit about the book and what it encompasses and that sort of thing?
I do kind of know that for most people, this is going to be the only book about financial preparedness that they're ever going to read. So much to the disdain of my editors who hate me for writing long books, I turned it into like this really comprehensive 400 plus page from A to Z type guide, because no matter how hard I try, I'm not willing to take anything out of the book at this point, because it all deserves to be there. And I tell people right from the beginning, look, this is what this book can do for you. This is what it cannot do for you. Great. Let's start with economic history. I go through case studies that, some of them happened many hundreds of years ago, like the tulip mania, for example, and
Mm-hmm.
move on to recent ones, including popular case studies that everyone knows, like your dot-com bubble, real estate bubble, but also stuff like the short domain mania of 2015 to 2016. I think you could interview 50 economists and nobody would know about it, because, and I kind of do these comprehensive things to tell to people, look, back in 1633, when the tulip mania, 1636, when the tulip mania peaked, you had some of the exact same behavior that people exhibited in 2015 to 2016 when the short domain mania peaked.
Yeah.
Then just like now, I distinctly remember, like when it comes to the tulip mania, you had tradesmen who had expensive equipment and essentially used that as collateral to borrow money and buy tulips. When it comes to the short domain mania, I had brokers from China. There was huge interest from China, and that's what fueled the entire thing. But even so many hundreds of years later, with the short domain mania, I had brokers from China who were bragging that, hey, look, you have all these high interest loans being taken out by people in China, and they're buying domains and they're getting rich. And kind of the same patterns. And I told that person, okay, great, perfect. But what happens when
Mhm.
prices go down? He had that like this reaction as if I'm the only person who even told him about this possibility. So it is really fascinating to see that years go by and history might not repeat itself. The manifestations are not identical, but it's impossible not to draw parallels. It's impossible not to find common denominators. The same way we can talk about people's behavior when investing in Bitcoin, or we can talk about their
Mhm.
behavior when investing in .com stocks or railway stocks in the 1800s or anything that's new technology related. Once again, we cannot help but find these common denominators. And by essentially internalizing the most important things that have to do with economic history, we have an amazing reference point at our disposal. And this, coupled with our willingness to catch up on current events, we don't need much more to position ourselves properly. We are going to have our own warning signal type system, and that we get feedback from the outside world. This is what I saw on the news today. We take that feedback, put it into the proper historic context, and see, oh, look, there's a parallel that can be drawn. This is what happened back then. This is what happened in another situation, and so on. And that way, you're not just passively standing by as people send information your way. You're actually interpreting that information and saying, okay, now it's time to be worried. Now it's not time to be worried. And there's just a ton of value in that. You then need to take the things one step further and kind of see the big picture. You have other things you have to pay attention to. Principles, kind of like these timeless investing principles that I tell people they don't have an expiration date. If you learn them now, if you internalize these things now, it's going to pay dividends forever. So through these principles, I kind of help people have an investment a healthy investment-oriented mindset. And that's very important. I then move on to saying, look, don't expect me to give you a rock-solid 100% guaranteed prediction. I'm not selling that. I don't know for certain. And I don't want you to be hooked on me, on my strategies or whatever. So why not become an independent economic thinker? Why don't you let me guide you through all of these assets? And I do it from the perspective of someone who has skin in the game, who trades them. Like I talk about real estate. I have income producing small rental properties here in Romania. I'm involved in that space. When I talk about equities the same way, when I talk about crypto the same way, it's just so important to refer to these things from a position of authenticity. And in the end, by kind of combining the academic dimension with my hands-on experience when it comes to those assets, I take all of these assets and say, look, let's look at them from your perspective. Here are the pros, here are the cons, here are the types of people who should be investing in them, here are the types of people who shouldn't be investing in them. And in the end, I do this for each and every asset, and it gives people a big picture type situation. And they're going to realize it's not rocket science. Okay, I'm going to put together my own portfolio. Here are the assets that I should be having exposure to, because for someone in my situation, they complement one another so nicely. Once again, you keep things simple, you keep things logical. And in and of itself, that's going to make it possible for people to have just an amazing portfolio. And this is why I'm telling people these things now, when nobody's panicking. For it's impossible to just snap your fingers and all of a sudden have an amazing real estate portfolio. It takes time. You have to find properties. You have to make sure you don't get scammed. You have to kind of then work on those properties a little bit. The same principle, even if not that much, but it is valid when it comes to other assets, at least as far as positioning yourself goes and choosing when to invest, how to invest, what to invest in specifically. So there's just a ton of value in having this conversation right now when nobody's panicking, because you're going to have the knowledge it takes to do these things, and you're going to have the time required to execute. And that's just plain amazing. And finally, of course, I do tell people at the end of the book, here are the things I'm personally concerned about. Here are the scenarios I would like to talk about. But I'm not talking about them from the perspective of someone who knows for certain what's going to happen. Instead, I do it because I kind of want to get people to tap into my brain. I want to say, look, I'm telling you these things so you can understand my thought process. By understanding my thought process, you can extract whatever value from it you see fit. And it's all of these individual pieces that combined give people essentially a from A to Z type guide. So I have kind of the peace of mind of knowing that even if it's going to be the only book of this nature that people are ever going to read, I've done a good job. I've got my basics covered. Whether we're talking about, philosophical, mindset-related things, whether we're talking about hands-on things like how to invest in real estate and do it properly. It's exactly, at least I tried to make sure that I cover everything that I believe is important and that I cover everything in the proper dose. And the end result is the book I have today.
Wow, fantastic, man. I mean, what I love is the fact that you're an economist, you're an academic per se, you've done your PhD, that you do everything, not just economists with the theory, but you actually trade, you actually buy real estate, you invested obviously in the equity market and cryptocurrency and everything else. And that's pretty amazing, man, because a lot of economists don't do that.
Yeah, I mean, on the one hand, of course, these things are very good at putting food on the table, much better so than writing books or YouTube. And it essentially enables me to approach YouTube and writing books from the position of someone who doesn't care about the financial. That's the part. That's why I'm selling my book for just 99 cents until Sunday, or that's why I'm being
which is amazing. Absolutely amazing. Wow.
This is why I'm kind of putting myself out there doing these things, because I just want to do them in a way that has the maximum impact. So yeah, I do these, but also aside from generating money, aside from giving me the financial freedom it takes for me to do whatever I want with the other dimensions of my life, they also help me become a better economist. Like, I've done so much stuff in the crypto world. I have done arbitrage in South Korea. Like, unfortunately, I didn't sell all my Bitcoin at the highs, but I did sell all of my Bitcoin that I had in South Korea. And when the price was 20K elsewhere, in South Korea, it was 26K, a 30% premium.
Wow.
And then, of course, they didn't let me take fiat out. So I had to buy back in and get crypto out, and that would be my profit, essentially gaining more crypto. So fortunately, I was able to buy in during the panic of February. And not only was the price lower, but the premium disappeared. So it's essentially the difference between selling at 26K and buying at 7K, for example.
That's exactly right. Yeah.
It's just amazing
Fantastic.
it's amazing how it gets your wheels spinning and you get to understand these things. And also, like, I trade on 17 different exchanges, and at one point it was almost like a hobby of mine to get approved at these exchanges. And in one case, it took 4 months of back and forth emails and submitting and resubmitting documents until I got them to approve me. And I'm on exchanges in Japan, in South Korea, in Europe, in genuinely all over the place. And it's this kind of thing that does wonders for your kind of mental elasticity. It helps you become better at what you do. You make money, you become a better economist. So it's essentially a virtuous circle type situation, in that you have behavior, you have positive behavior that generates positive results, that reinforces this positive behavior, and then your wheels keep spinning until, all of a sudden you're on this trajectory that makes sense.
Absolutely. And you're taking on currency risk as well, which is fantastic. And obviously, the exchange risk and arbitraging, which is absolutely brilliant.
It's just crazy how at one point, especially, there was a premium in Japan as well, just not as great as in South Korea. So it was just crazy.
Wow.
I traded Bitcoin in Korean won. I traded Bitcoin in Japanese yen. I traded Bitcoin in dollars. I traded Bitcoin in euros. And it was,
you could take a position in currency as well. So you're a currency trader as well. That is awesome, man. Hey, Andrei, if people want to get access to this fantastic book at 99 cents, how do they do that? What do they need to do?
They can simply head on over to Amazon, Barnes & Noble, iBooks, which is Apple's application, or Kobo, search for the name of the book, which is The Age of Anomaly, and they're going to find it easily. Or they can just go to a small website I set up where I have all of the links, which is called ageofanomaly.com. And also, if they want to check out my contest, like, once again, I kind of went the extra mile, and I said, look, even when you're selling ideas, you're still selling something. You need to generate buzz. You need to get people interested. And so what I did, I contacted a bunch of sponsors, and I have this huge contest that's going to go on this week from Monday the 6th of August to Sunday the 12th of August. And it's just crazy. Like, the number one prize is 1 Bitcoin. The number 2 is like 1 Bitcoin and 1 Litecoin. Then there are, like, even smaller prizes, 10 prizes of $100 each, $100 Amazon gift cards, domains and hosting, like everything you could possibly, hardware wallets, just these amazing prizes. In the end, I do this. Why? Because I encourage people to spread the word about my work. I give them extra chances at winning. And it all ties into the virtuous circle philosophy. I did kind of my best to go the extra mile and know that I've tried to get my ideas across in a way that reaches the most people possible. And I did this by lowering the price, by organizing this contest, by reaching out to people and being on over 100 collaborations on YouTube, all over the podcast scene. So it's just
crazy. Fantastic.
But if you're serious about doing education right, and if you're serious about kind of being a thought leader, propagating the right ideas, and deriving so much pleasure from it, you have to think outside the box. You have to think outside the box. You have to execute. You have to put in the work. Like, for example, yesterday, I've been recording collaborations all day up until 6 in the morning, continuously, with like 30-minute breaks between them, and me having some tea with honey. Like,
I'm amazed it wasn't a massive amount of coffee or a strong vodka or something to keep you awake. Amazing, man.
Yeah, it was definitely kind of a situation in which I pushed myself. I tried to do it in a sustainable manner, because I've been doing it for the past month, just shooting these collaborations. And that's why I kind of avoided going on coffee drinking binges and whatnot, because you do it now, but you burn yourself out, and what are you going to do the rest of the month?
Absolutely. So you'd end up being a coffee addict.
Yeah, so it was just a crazy experience. But
wow, it's fantastic.
I tell people that, like, this, for example, is, I think, the 77th collaboration I'm shooting, or something like that. And I'm going to be shooting much more, not much more. It's going to be over 100. And
yes,
if now at this stage in the game, I'm just as excited talking about my work and about my book and about the importance of the book as I was during my first one, I think it's a decent barometer which shows kind of how I feel about my work.
Oh, definitely. Look, like you, I love my work. I love what I do. And, obviously, I've got a business where I, teach people about cryptocurrency. But I just love, what you're doing, and I just love this book, The Age of Anomaly, Spotting Financial Storms in the Sea of Uncertainty. The book is basically, I've read this book, and it's basically implying that there's another GFC coming that we saw in 2008, 2009. And I do tend to agree with you. Can you just elaborate a bit more on that, why you think that's going to happen and what it means for cryptocurrency markets?
Of course. There are, on the one hand, of course, even from a cyclical perspective, like, if another year goes by without us having a crash, as I've mentioned previously as well, it would be a record. So even from a cyclical perspective, we're kind of overdue another global financial crash. But then there are other pockets of anomaly, whether we're talking about our essentially zombified economy that's hooked on cheap money and injections of capital, whether we're talking about the geopolitical implications, trade wars, the rising waves of protectionism. Once again, it's economic history that has all of these answers. And you kind of know that, okay, whenever this happened, it didn't end well. So for all of these reasons, it's more than valid for us to be concerned about the next global financial crisis, and especially about what happens next, because I do love this cover. Like, you have this person sitting in a boat staring towards storm clouds that are gathering on the horizon. And I think it perfectly describes our situation, because there are just so many of these pockets of anomaly. There are just so many reasons that individually, each of them is a major cause for concern, but collectively, they have the potential of triggering just a devastating financial storm type situation. And I'm even more afraid than of, just a global financial crisis. I'm even more afraid of what happens next, of what happens when people realize that it's maybe time to address the elephant in the room, that governments and central banks are not going to be able to bail us out, that eventually it's governments and central banks themselves that are going to have to be bailed out. And it's that narrative change that tends to generate big reset type situations. And it's those big reset type situations that bring about epic transfer of wealth scenarios. And it always gives me goosebumps to think about the average person in this context, because the average person, I could be shooting 10,000 collaborations. The average person is still, most people are not going to care. Most people are not going to find out. And even if they do, they won't act on it. So unfortunately, as history teaches us time and time again, we have all the reasons to believe that the average person is going to be on the losing end of this deal.
Terrible. I mean, you're right about the protectionist thing, because even before the 1929 stock market crash, there was huge protectionism being done by America. And, we've seen protectionism destroy markets and obviously reduce economic growth. And I mean, that's pretty much what America's doing now with China particularly.
It's always tempting. It's always tempting from a political perspective. It's always tempting to do it because, hey, on paper, it makes sense. And in an ideal scenario for you as the country that initiates it, if nobody else retaliates, then perfect. You're doing great. You're going to make much more money. Nobody's going to do anything about it. But in the real world, it's not that simple, because everyone's going to retaliate. And then everyone's going to kind of embark on this protectionist trajectory, and before you know it, that has a huge impact on trade, that has a huge impact on relationships between countries, that has a huge impact on public perception, and there's a very high likelihood. That's why I tell people that the stakes are so high.
Yes.
Dramatic. These things, historically speaking, bring out the worst of us, and when the worst of us does come out, we have some very powerful toys right now. And one of the things I do try to kind of work into my books, my YouTube channel as well sometimes, is that when it comes to a lot of conflicts that ended up, having devastating consequences, time and time again, we do notice that at the epicenter, at the beginning of it all, there's some proper economic context. And that's why I kind of make it my life's mission to generate awareness, to teach people economics, to kind of make them better informed on this subject, because so many things in life revolve around economics, whether we realize it or not, that it's just crazy how better off humanity would be if people would just spend, no pun intended, 1 minute becoming better at this stuff.
Absolutely. I agree with you totally. I mean, economics is basically everything. And I mean, I love it, and I love the history of economics too. But and you're right. I think in some ways human nature repeats itself again and again, and it comes through with economics. So I know you mentioned all those different catalysts that are going to particularly bring markets down. When you talk about markets, are you talking about equity markets? Are you talking bond markets, currency markets? What particular markets are you talking?
I am especially referring to the elephant in the room, and that is everything that has to do with governments and central banks. Like, I am agnostic when it comes to asset classes. I don't pick sides. I just want to be properly rewarded for the risk I take on. So there's a reason why, for example, I'm not touching bonds at this point. I just don't feel, and historically speaking, I bring arguments in my book, I don't feel I'm properly rewarded for the risk I take on. And this is actually the main scenario I feel, in that we're going to have a deflationary crash, of course. And that means, yeah, there's going to be pressure on the stock market, the real estate market, even crypto, much like precious metals after 07, 08 might initially go down. And people kind of have to be prepared for this. But what happens next? What happens if that ultimately leads to people losing confidence in governments and central banks? In that case, all the assets that aren't tied directly to governments and central banks are going to spiral out of control, but in an upwards direction. And people sometimes are surprised when they ask me about real estate, okay? And they say, are you bearish on real estate? And I say, yes, but I'm not selling my real estate. Because on the one hand, I acquired it at a good price, but on the other hand, of course, if you think you could pull off the timing, then you sell before the crash, buy back in, and ride the upcoming wave up. But it's not that simple. You have to sell your properties, you have to find buyers, you have to then find sellers when you buy back in. This takes time. And it's just a situation in which, if you see the big picture, you realize that, yeah, once you figure out what the elephant in the room is, it's going to be easy to position yourself. So at this point, I helped someone obtain, for example, a loan here in Romania, and a real estate loan. And it was amazing. Like, that person got a loan at 4.5% interest in our unstable local currency with fixed interest rates, fixed. And the lady at the counter was looking at me because I was there and said, this was at a time when even our interest rates were very, very low. Since then they went up. But at that point, yeah, I said, look, lock yourself into this. We want fixed interest rates. And that person at the counter said, yeah, but you should take the variable ones because look, your interest rate would be lower now. And I said, thank you, but we will take the higher interest rate. Thank you very much. So we took that. And right now, the person in question, as we speak, with interest rates having risen here in Romania as well, is already in a much better position than she would have been in by taking the variable ones. And it's these, once again, it's all about anomaly. It's not natural for you to be willing to give people loans in a high, and I'm saying this as a Romanian, it's not rational to give people loans at such low interest rates in a high-risk country, in a high-risk currency, because these loans weren't in euros or dollars, they were in Romanian lei, they were in our currencies. And the same
What's it called? Romanian lei, is it? Romanian lei, did you say?
Yeah.
Wow.
RO1 is the abbreviation for it. And the same way, you have countries in the European Union, like, you know, Spain, with its major problems and unemployment situation, and, you know, all of the underlying things, the Catalan situation, whatever. You have countries like them that like Spain, that occasionally borrow at lower interest rates than the United States, and it's these anomalies that make it clear you need to pay attention to these things, because people, especially now, it's always easy to talk in hindsight, you know, it becomes obvious. But right now, there's this underlying idea in people's minds that, no, of course bonds are safe. These are governments. They're going to pay us back. They're good for the money. Don't worry about it. And when that kind of narrative gets taken upside, you know, gets taken to the extreme, people are going to realize, wait a second, you know, you can go back.
I agree.
In my section about bonds, I actually say, historically speaking, let me just give you examples of countries that have defaulted. And you are going to see many household names on that list. And
absolutely,
this is I believe people are going to realize. So, of course,
the Italian bond market's just one that's waiting to implode. I mean, third largest bond market in the world, and it's going to go to like a Greece, basically.
But of course, I do tell people, I give them the example of Japan. You know, like they were always aggressive in terms of monetary policy, and you had people like Kyle Bass who were all over television saying, it's time to short the Japanese yen. It's time to short the Japanese government bonds. And he made so much sense. He presented logical arguments. And that trade is now called the Widowmaker, because so many people lost so much money on that trade. Why? Because it's, one of the old adages in trading. The market can remain irrational for longer than you can remain solvent. So would I
Absolutely.
would I short government bonds now? No, I would not. Would I invest in them? No, I would not. And it's this kind of positioning that I help people, better understand in my book.
Mm-mm-mm. Well, I mean, effectively, paying fixed, on a loan or, selling, bond futures on a government bond is basically going short. But, I mean, you're seeing curves, international interest rate curves going up everywhere. And, having an inverse yield curve where also rates were negative for so long, it's just not realistic. And it doesn't price anything for risk or return or anything. So, and the thing is, we're all, we're coming out of this incredibly low interest rate environment.
Exactly.
I mean, anything can happen.
And
Seriously.
even at these low interest rates, we're now looking at, countries like Japan with a debt to GDP ratio of over 200%, or at so many countries in the developed world who are at around 100%, and this is considered perfectly rational. And then you look at how much it's costing those countries to service their debt at these low interest rates.
Absolutely.
Let's not even talk about the deficits that would be required in a context where interest rates were to quote unquote normalize. And once again,
Yeah.
so many areas of uncertainty out there. So many
They're all
reasons.
broke. Yeah.
Exactly. And as much as, even a Ponzi scheme like Bernie Madoff's scheme, a Ponzi scheme can last much longer than people realize, but not forever.
Yep.
And this is, I think, one key takeaway.
Absolutely. So given that scenario that you painted, which I agree with like 150% seriously, and you're probably about the first economist that I've spoken to or read that actually has the exact view that I've got, very similar. Given that context, what do you think is going to happen with cryptocurrency?
I personally believe that the best of the best in terms of crypto are going to be a remarkably effective hedge, especially against banking-related uncertainties where we already have a decent correlation, especially against monetary uncertainty, but even uncertainty in general. But the mistake people sometimes make is that they assume that just because they've made the right decision, the market will immediately reward them. And what they don't understand is that markets frequently move in the direction of maximum pain for both buyers and sellers. And then those people say, hey, I've invested in this amazing hedge and markets are crashing, but why is crypto crashing initially as well? It's because the market does what the market wants to do. And many people get shaken out at this stage. And then eventually, of course, the market proves them right. The market eventually digests the news and agrees, oh, wait, this is actually a good hedge. I'm going to reward people. But by the time that happens, a lot of investors, or lots of weaker hands will have been shaken out. So it's definitely an important threat. Another threat is represented by people's laziness, because the crypto world in 2017 and even very early on in 2018 has reinforced and rewarded bad behavior. Like, people got away with making a ton of money without doing proper research by just investing in flavor of the month, pump and dump schemes, projects that don't necessarily have anything going in their favor aside from marketing teams that pump them, and eventually you're left holding that bag. But they were able to make money off this, and it kind of reinforced a very toxic way of thinking in the crypto world, And I believe the next financial crash is going to be a good catalyst for a bit of a big divergence type situation in crypto, and that you're going to have the best of the best in terms of cryptocurrencies, projects that deserve to be here, projects that put something meaningful on the table. Those are going to act precisely as the hedge they're supposed to represent. Whereas when it comes to pump and dump schemes, I would personally like to tell people that what worked before is probably not going to continue working when it comes to them. So if there's ever been a time to kind of focus a bit more on due diligence, kind of focus a bit more on actually doing your research and not, following a few people on Reddit or on Twitter and just throwing money at something based on what's currently pumping. If you do that and kind of make it a goal to play the longer term game in crypto as of this point, I think you're eventually going to be very happy. But of course, yeah, it's Unfortunately, a lot of people are in crypto for all the right reasons. Very many of them have already been shaken out, and it's normal market behavior. The market is supposed to shake out people who are in it for all the wrong
Yeah.
reasons. The same thing has happened throughout history, throughout asset classes, whether it's tulips, real estate, stocks, domain names, crypto, you name it. So it's just
Yeah.
a part of the ecosystem. It's perfectly natural. But yeah, I would definitely say that if those who are listening, if you're a person who's tech savvy enough to be able to use a smartphone, then you need to include crypto as a part of your solution.
Yeah. No, totally agree. Totally agree. And I mean, that's been my, annoyance with the crypto market. Things that are where the technology is absolute garbology. And of course, I've mentioned, Ripple to you and XRP, where the technology is second to none, have partnerships, clients, you name it, and it's still traveling where it's traveling, and yet they'll, put some other cryptocurrency up there, $150 US or something, or
Yeah.
1,000, and there's incredible problems with them. But I think you'll be absolutely right. It's just the test of time, and markets. I do believe what you're saying can be correct. It's the test of time, and the real investors just have to endure. And it is a part of market machinations, because that's what markets do. They just get you out, and you need reasonable pockets to put up with volatility. Also, I agree, the equity market looks very unstable to me, particularly the US market. Has gone up a lot since pre-08. Pre-08 was around 14,500 on the Dow, and now we're looking at, got up to 26,000, and we're looking at about 24,200 or something. But it just looks like a three-legged stool. You take away one leg, and down she comes.
This is the type of environment I feel when people need to be paying attention to money management. Like time and time again, the pattern I'm seeing and I keep in touch with a lot of traders, some of them very successful, and the pattern I always see is that perhaps the most important dimension is the money management one. It's more important than having a solid win rate. I've seen people with win rates that don't seem impressive at all, but who have not only survived, but they've had longevity, they've thrived in the space because they had proper risk and money management. This is the time to put it to good use. So yeah, when people are euphoric, when the talking heads on TV are saying, the usual paradigm shift, it's all gonna, we're at the epicenter of a new era of prosperity that's never going to end, and stuff like that, take at least some money off the table. Once again, would I personally be shorting equities right now, even US equities? No. But I would venture to say that it's maybe not the worst time in the world to kind of start thinking about your exit, maybe. Timing it. What do you have to do? What are the milestones at which you're going to take some profits off the table? What are you going to do with those profits? Where do you see opportunities that kind of have a better risk to reward ratio at this point? So if there's ever, it's definitely a good example, I think, the current situation of a context where you should put your money management knowledge to good use.
Oh, absolutely. Absolutely. There's no doubt about it. Actually, this is a personal interest, which is sort of a little bit different to, what we've been discussing. Just of interest, what's been happening in the property valuations in Romania? Has property been going up a lot, like it has, say, in Australia, for example? I'm just interested in that.
Well, we have had, obviously, like everyone else, prices have gone crazy during the previous bull run. And after that, they collapsed dramatically. And I was able to make some very good purchases at very low prices. But yeah, right now prices are going up again. And for example, I'm no longer adding to my real estate portfolio. And when I look at the last property that I added, right now prices are like 35% higher than then. The last property I've added.
Wow.
So it is.
So what would you pay for a property in Romania? I wouldn't have a clue, honestly.
It's all relative. Like, for example, the current price in my city, which is the largest city in Romania, it's full of young professionals, people who are doing okay financially. Right now, you'd be looking at something decent for 1,500 euros per square meter. So
wow.
It definitely doesn't seem cheap to me. Of course, it's always all relative and whatnot, but I've been fortunate enough to buy properties in really good locations, like close to shopping malls. They're doing just great. I kind of, it's a bit of a hobby of mine. It helps me clear my mind to work on them myself, as, you know, just again, an exercise in mental elasticity. So they're in good shape. They're generating rent income. I'm comfortable with my real estate portfolio because, you know, I did my homework. I also made the acquisition at a proper time in the market, and I'm happy with that. That being stated, of course, do I believe there's more upside? Probably. Things might get even crazier, and I do hope that if they get extraordinarily crazy, I will be wise enough to maybe consider liquidating a bit of my portfolio. Other than that, even if that is not to occur, I am perfectly content with my position. I'm content with the fact that, you know, eventually everything I've built in terms of financial resilience for myself, for my family, they do give me a great sense of mental comfort, because I know, talking about real estate, if things are going to crash, then yeah, people are not going to be able to afford paying rent as much as they're paying right now. But people are still going to need a place to live. People are still going to pay some rent. And the name of the game is, again, even when times are tough, you're going to land on your feet. My real estate income producing properties are still going to produce income. Maybe not as much as today, probably not as much as today, but it's going to be something. And the same principle is valid when it comes to my portfolio. And it does give me some great peace of mind. It gives me great clarity to know that my financial house of cards is in order, and that kind of motivates me to work on that of other people and try to generate awareness for them. And once again, this is why I'm trying to do it now, because it hasn't been easy. Like building the portfolio I have right now, the portfolio that kind of makes it possible for me to do whatever I want and write books, be on YouTube, you know, focus on this dimension of my life, knowing that my family's okay. Do these things now, guys, because it takes time. It takes more time than you realize. And, you know, the best possible time in the world would be yesterday, but even since that's no longer an option, just start doing something meaningful after watching this video, and it's still fine. Because, yeah, nobody's panicking right now, but there is no time to waste, I feel.
Yeah, I agree with you totally. Absolutely, totally. I mean, you just, you know, Andrei, I'm so impressed with you. You're only 29, is that right?
Yeah.
And you're just incredible. Seriously.
I'm not really sure why I've always been good at money related stuff. Like I've done so much stuff that has to do with money, and I don't know. It's, in the end, it's something I'm good at. It's something I can put to good use, but I do feel kind of a responsibility of turning this knowledge, these things that I have working in my favor, figuring out how to make them work in, you know, in the favor of other people as well. Especially since I've been through I haven't had the easiest life in the world. And
I understand.
if at all possible, you know, I wouldn't wish some of the things I went through on anyone. And it's kind of what keeps me going. You know, I'm in it. Few things in this world give me, you know, greater peace of mind and a greater sense of fulfillment than knowing, you know, getting feedback from people. Hey, I checked out your book. I like your book. Hey, I love your video. Hey, I cannot believe how better I am at economics after following you on YouTube, and all these things. It's kind of, you know, there comes a sense of responsibility. If you're talented at something, if you're good at something, I feel there is
I agree with you.
a sense of responsibility to kind of pay it forward, to give to other people, to kind of, you know,
to give it back in some
pretty
way.
much.
I think that's marvelous.
In that sense, yeah.
Yeah. I mean, look, honestly, I love your book. I've checked out your YouTube. Now, YouTube, what's it called? One Minute Economics. That's right. So 1 Minute Economics is your YouTube channel. I mean, honestly, you're amazing. You know, I think you're an amazing person, but you're an amazing person professionally, and just the way you speak and your understanding of the asset classes, and what I love about you, very objective about looking at the asset classes and seeing, you know, the valuation of something. I mean, what I've found with people is they can know the price of everything, but not know the value of anything.
Exactly.
You know, they have no idea about whether something is expensive or whether it's cheap or whether it's got more to go. And what I love about you is you can actually look at something incredibly objective and go, this, you know, with your economic background and everything else, and just say, this is way too over the top. This is just crazy. And that's what's really needed in markets, just from a macro sense, to be able to pull back look at the opportunities and look at what's been, too overbought and what's been too oversold. So quite amazing indeed. So in terms of, again, this book, guys, for everyone, this is an amazing book, The Age of Anomaly, Spotting Financial Storms in a Sea of Uncertainty, written by Andrei Polgar, Polgar, fantastic. You can see Andrei on 1 Minute Economics, and it's giving this away literally for 99 cents, which is incredible. It's an incredible book, man. I tell you, it's just unbelievable. Look, Andrei, I've got to thank you, honestly. You're fantastic. And I'd really like to keep in touch with you, because you just, to me, you're so inspiring and such a lovely person and such an incredible young man.
It's always a pleasure, and I'd be happy.
Honestly, you're amazing.
I'd be happy to do some more stuff together in the future as well, and I genuinely hope people are going to find our discussions just inspiring, useful,
fabulous,
and most importantly, conductive to meaningful action on their part. This is our mission here, making sure people act on our advice, do something, and in the end, we hope as many of them are going to be happy as possible.
Definitely. Well, if I'm out, I'd love to be able to, have a chat with you, on video again, say once a month about economic themes. And, I love economics and I love history. And
I'm just going to go ahead and stop the recording.
Yeah.
Because I don't.